Welcome back. This is Unfiltered Forex. I am yours, Clement, here for the weekly recap for the week ended July 20th. No, July 21st. Yeah. So let's begin. A lot has happened this week. Okay, not a lot, but yeah, we had some major events this week. Let's rewind. Let's look at some of them. We'll first look at the economic calendar, then go to the earnings calendar, then talk a bit about other stuff that happened this week in these markets. Okay, so Monday, 17th July, we got there. China GDP, 6.3%, slightly lower than expected, but there's no need to pay a lot of attention to that. Continuing, all these other releases, you can ignore them. In fact, let me zoom in. There we go. On Tuesday, we got the Reserve Bank of Australia monetary policy statement. Canadian housing starts, not very important. USD core retail sales month over month, June. Retail sales month over month, June. These are very important numbers. These numbers indicate consumer spending and consumer demand. These numbers coming lower than estimate was really good news, because looking at it from this perspective is, if the retail sales are strong, it means the consumer spending is also high, and that's something that's going to push inflation further and going to keep inflation high. But when consumer demand, consumer spending is still growing, but it's growing slower than expected, you can see these are positive numbers. That means you can expect the economy to cool a bit slowly, a bit slower than expected, because now inflation is not, these numbers are not a threat to inflation as much as they would have been if the numbers were very strong. Let's look at the history of these retail sales numbers. That tab. Here we are. This is trading economics. Oh my goodness. Yeah. Retail sales in the US was 0.2% month over month in June of 2023, following an upwardly revised of 0.5% increase in May, but below forecast of a 0.5% increase. Blah, let's continue. Just look at the chart. You can see these numbers, they really do fluctuate a lot, but as long as they're positive here, that means there's growth, and you can expect the economy to maintain the current pace of growth. It's not going to get too slow. These are not recessionary numbers. These are healthy numbers that signify that the economy is going to do good. Continuing, yeah, these are the previous releases. This is for June. The actual for June was 0.2%, and then the actual for me was 0.8%. A slight decrease, but it's good news. It's mostly good news. Go back here. Then, of course, Canadian CPI. We're not going to look at that for today. Then, of course, this Wednesday, GBP CPI, Euro CPI, then building permits for the dollar, the US economy, 1.44 million building permits for the month of June. This is a preliminary release. And then housing starts dropped by 8% in the month of June. Big difference from the previous number we got. And you can see even this one is a downward revision. Housing starts for June, 1.4 million. Big decline continuing on Thursday. Okay, so this week, even all these numbers, They are important, but not so important. You can just look at them from the surface perspective. As you can see, I'm not going too deep into analyzing these things. Here for the jobless claim, this was very, very bearish for the dollar because it is expected that strong labor market is likely to keep the Fed hiking rates again. So that was Thursday, and then Fed's balance sheet, existing home sales, Philadelphia Fed Manufacturing Index, big negative, almost the same as last time. Nothing interesting here really. Friday, core retail sales for the pound, core retail sales for Canada. Then that was pretty much it for the week. So for the economic calendar, as you have seen, there wasn't much to expect. Okay, now let's go to the earnings calendar because that's something else we need to look at. Here we are. This is the earnings calendar for the week that has ended, and these were the major earnings. If you saw the weekly forecast, you remember this calendar is the same one. So on Wednesday before the open, this is where most of the heat was, especially with the Tesla and Netflix numbers. Because Tesla, they beat estimates, but on the revenue margins, profit margins, they kind of declined due to the price cuts they started at the end of the last quarter. That's now reflecting in their numbers. The profit margins have slowed down. I think it's at 9%. Yeah, profit margins. Netflix, another one. So after Tesla released earnings, their stock was flat during the after hours trading. Then when the market opened, it opened lower, and then the pre-market move was bearish. Even during the session was also bearish, and even the following day was also bearish. It was two big red days for the Nasdaq because of this company in particular, and also this one. Netflix, they released good numbers. Subscriber count high above estimate. It was 5.9 million subscribers versus a 1.8 million estimate, which is good news. But unfortunately, they slashed their revenue outlook for the next quarter. That's something that sent their stock declining pretty bad, pretty hard. And Goldman Sachs, these ones they missed estimates on the revenue, and I really can't remember much about them. Anyway, TSMC, big semiconductor company, they missed their profit target by almost half. Was it half? Not so sure, but yeah, there was a miss on the expected profits. That's something to look out for in the next quarter, maybe the semiconductor industry. Otherwise, for all of these banks, the bank results they were pretty good. If you remember, what do you call it? The US 30. The US 30 index was green for like the most part of this week, and it was the first 9 day straight since 2017. Let me look for that article. Here we are. Dow XL longest winning streak in 6 years. Nasdaq ends the week lower. Stocks favored Friday with most tech stocks weighing on major indexes. Still, the Dow Jones Industrial Average gained for the 10th straight day, a feat it last achieved in August 2017. Yeah, S&P 500 and the Dow both lost steam around the end of the day, falling from intraday highs to close up 0.03% and 0.1% respectively. The Nasdaq fell a bit more than 20 basis points. The Dow led stock indices this week, adding 2.2% compared with the 80 basis points gain for the S&P 500 and a 60 basis point decline for the Nasdaq. Investors got to take a breather today after a busy week of mostly solid corporate results. American Express disappointed with its earnings reporting its weakest volume growth in over 2 years and revenue below estimates. Shares fell nearly 4%. So, as you can see here, this company, American Express, it's in the Dow, it's not in the Nasdaq, but it fell. Otherwise, the main company in the Nasdaq that released their earnings this week was, of course, Netflix and Tesla and IBM and some other small companies, but the main ones were Netflix and Tesla. And the stock slid and resultantly dragging down the entire index of the Nasdaq. But with the Dow Jones, a lot of banks were reporting and they did good. So the Dow Jones, you can see, gained for the 10th straight day on Friday. Yeah, that was very good news for that index. Moving on, here on the charts, as you can see, this is the Netflix chart, and this, yeah, this is the Netflix chart, and as you can see, the stock declined. This is like over 2%. Yeah, no, this is even over 10% in 2 days after releasing earnings. It released earnings on Wednesday after the trading bell, after the close, Wednesday after the close, and then yeah, the stock did not do good. This is among the stocks that were dragging down the Nasdaq. Let's look at Tesla. Here we are on Tesla, another one. The stock fell like 10% after releasing earnings and even crashed lower, slightly over 1% on the following day. This was a big surprise because someone like me, I was expecting Tesla to get to 311, 315 there, but as the news came in, as the earnings came in, as you can see here, the earnings, the icon is green, meaning they beat estimates, but the profit margins, that's what led to this significant decline. I lost a lot of money there, by the way, but still keeping the faith. Tesla is a good stock to hold. Moving on, let's look at the Dow. Yep, this is the Dow Jones Industrial Average. As you can see here, this is the daily chart, and there's quite a streak of green candles here. Let's look. This is Monday, 10th July. At 10 days, that's 20th July. Yeah, that thing, it notched 10 straight days of gains. Yeah, it did 10 straight days of gains at the close of Thursday, which the last time we did that was in 2017. I'm not going to look that far behind, but as you can see here, we are very fast approaching the 36,000 level. I don't know if it's going to get there, but we're going to see probably next week if the Fed says we're seeing evidence of inflation coming down. They may not need to raise rates as much as they previously expected. This index might rally even higher. On in the hope of softening business conditions. Yeah. And something else. Let's look at the Nasdaq. Yep, this is the Nasdaq. A daily chart also, as you can see here, the week started on Monday. Yeah, Monday, 17th July here. Then on Tuesday was green also. On Wednesday, that's where the index turned flat. And after the Tesla and Netflix earnings came in pretty bad, that's where the stock declined. No, the index declined 2% in one day. This is a very big drop. The last time we had such a big drop was not even in recent times. It was quite a while ago. Yeah. So as you can see, when here in this case, the market seemed to be longing for this retracement. I think it should be safe to buy, considering that we're expecting the coming week the Fed Chairman Jerome Powell to come and gaslight the bulls again. Yeah, Yields does that, and he does a pretty good job. So as for that one, I will I will look at it next week. I'll be looking for buys. Yeah, don't expect this one to sell off any longer, especially considering there are also major earnings coming next week. Alphabet and Google. No, Alphabet and Microsoft. Yeah, we'll wait for those ones and see. And of course, we have to look at the CME Fed watch tool. And here we are. The next FOMC meeting is in 3 days, 21 hours, 18 minutes, and 49 seconds. Target rate probabilities. You can see this is a 99% chance. Like the market is sure this one is going to be a rate hike. And yeah, we're going to see what if the Fed will actually do this or deliver a surprise pause or surprise hike. But at the moment, this is the expectation that this 25 basis point hike. It's coming and it's very likely to be the last one. Okay, let's look at the probabilities. Now this table is where you can tell if this rate hike is going to be the last one, because this is the current rate, right? Yeah, this is the current rate. This is where we are now. 5.25 points, 5.25%. That's the rate currently. This is the next one we're expecting. You can see the probability here. This is the next one we're expecting, or the July meeting, which is in 3 days. Then these are the two hikes which are expected to come later this year or even next year. The probabilities, as you can see, are very low. 2%, 2%, 1.6%. The probabilities are very low. The probabilities of this other hike are quite significant, but still below half. Below half of what. So this hike, once it comes, the market is pretty much expecting that it's going to be the last one. So we're going to wait and see. Anyway, this is just a recap of what happened this week. I'm going to talk more about these things in the next video when I talk about weekly forecast for what to expect next week. The Federal Reserve FOMC meeting, the ECB meeting, and of course the earnings season, the big earnings season that's coming. I'm gonna stick around for that one. As for now, I'm done. See you later.